I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Today is Tuesday, October 18th. We've got four markets for you today, two in the livestock, two in the grains. We're going to kick things off with the grains. We've got corn and soybeans. Firstly, we have the December corn chart pulled up here, and coming into this morning's trade, we were quite a bit softer, a lot of that on the back of spillover weakness from the previous session, but we were able to defend these previous higher lows here from October 6th and 7th. That comes in near 671, 671 and a half. Today's low 674 and a half, and we were able to rebound. Now, we didn't finish in positive territory, but if you strip out the overnight session, corn was up, and I think that's a little bit of a silver lining for the bull camp. We do not have an outright bullish bias, but we are in a bullish bias territory, so we think the market could claw back and get back up a little bit closer to that $7 level, which is psychologically significant. The more technically significant pocket is in that mid 690 range, and I wouldn't be surprised to see the market again claw back in there. I don't know that we're going to have the muster to get out above $7. It looked like we were going to, forming a bull flag here, but then we broke down. So just kind of playing it by ear. If we take out today's lows, I would probably look to neutralize, if not go bearish, in the very near term, as that could start to trigger some additional selling pressure, long liquidation, which would potentially open the door towards these other major moving averages, the 100 and 200 day, which come in the mid 650s, as well as other previously important price points. You can see that this was resistance all the way back in the spring, breakout point, and then it was support, and then the breakdown point. So there's been a lot of interaction in the mid 650s, really going back all the way to last spring. So if we aren't able to defend today's lows, that could be potentially where we're headed. Again, we lean a little bit more optimistically here in the very near term, but that's what we're looking at for the corn market and some of the levels. Now, moving over to soybeans. Soybeans got up into our resistance pocket, 1407, 1415, failed against it twice, and this reversal was kind of the caution flag for the bull camp. Now we're back here towards the lower end of the risk range, 1345, 1355. This was the gap going back to July 26th. That was tested and held. My concern is that if we test this again, we're just going to break through it. And there's not a whole lot of support until you get to sub $13. This low here from July 22nd was 12.88 and a quarter. So again, if we can't defend these support levels down here near 13.50, I would probably look for a bigger flush out move. So that's what we're looking at for the soybean market. If we are able to defend that pocket, then potentially we get back to the $14 handle. But I think we're going to need a more bullish fundamental news to get us a significant move out above there, at least in the very near term. So that's what we're looking at for beans. Now moving over to live cattle, we've got the December contract pulled up here. We were treading on the 100 and 200 day moving average for just about 3 weeks, and we finally got the big move yesterday and some follow through in today's session. The cash market starting to firm up, which is nice to see. So if we see some continuation, we could get back up towards the 151 area, which I believe we have listed as 4-star resistance. That would probably get us a little bit closer to overbought. So potentially we get a little bit of follow-through momentum to the upside. Retrace this breakdown point from September 22nd above 150. And at that point, I think I might be looking to look on the sell side. We've been optimistic in our daily reports. The patience was waning. We wrote about that the other day, but the patience did pay off with that bullish bias. But if we get up towards 151, 152, that's the top end of the risk range. So you buy the low end of the risk range, you sell the top end of the risk range. At least you know where you're wrong, right? If we break out above here, get out of the way, rip the Band-Aid off, and kind of reassess things on the fundamental and technical front. So that's what we're looking at for December live cattle. Wrapping things up, last and certainly not least, Lean Hogs. A powerful move to the upside after a just complete washout. And we got to this 86 level, 85, 86 area, which was this little bit of a gap here going back to September 23rd, and we chewed through that. This was our resistance pocket here and I don't know that we're going to be able to get much more follow through. If we do, your next upside objective is probably closer to 89. Lean hogs are one of those markets where they can be, crazier for longer than people expect. We saw that on the way down. Maybe overcorrection to the downside, maybe we get an overcorrection to the upside, but this is a seasonally weak time for lean hogs. So we like selling in to this rally now that we've hit some of these resistance targets. But again, if we can't defend this 86, 87 area, probably get out of the way, as you could see continuation back towards these highs that really, it wasn't all that long ago, back in mid-August, up north of $90. So that's what we're looking at for grain livestock markets. That's what you should be looking at too. If you've got any questions at all, please feel free to reach out to us. Send me an email. My email is oliver@bluelinefutures. And always remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.